Hello YouTube, this is Crazy Trader and I'm here again with your favorite stock review. What do we have today? Today the market looked really good for me, okay? Not everybody, but for me personally the market was pretty good. Up $755. That's a lot for a day. I can lose it all tomorrow, I don't mind. Because the market is fluctuating, going out, up and down, but that's fine. That's 1.95%. At the point in time I was up 2%. Almost $1,000. That's a lot. I hope it goes out tomorrow, but if it doesn't, that's also fine with me. Let me do this quick and get out of here. So today, what stock review am I bringing to you? Two Habors investment, ticker symbol TWO. And this is part of my 5 REITs that I believe every millennial and Generation Z should have. That I was speaking about last week. So if you are a Gen Z or a millennial, I've spoken about NYMT. I've spoken about MITT. This is the third stock that I'm speaking about. That is Two Habors investment, ticker symbol TWO. Let's look at how it's doing today. $6.44. That's decent. For the past week, it's been down 3%. For the past month, just 1% down. It's going up and down, it's just bouncing up and down. For the past 3 months, it's been down 14%, which is a lot, which is really significant. Look at that. It came all the way down from 755. Let's go here. For the past 1 year, it's been up 26%. That's not too much, but look at this. Before the pandemic, before the pandemic, this guy was trading sideways from 2017. Let's say even from 2016, it was trading at 6, 7, 8, 9, 10, and then boom, 2017 went up to 16, and then it maintained the 16 all the way to 2020 when the pandemic hit, and this guy dropped to $2.42. That's sad, but it has recovered really nicely, and it's right now at $6.44, which makes a lot of sense. Sense because their dividends has been cut. Their dividends were cut, so they are gradually going up to where they belong. And I'm seeing this stock at least as a $10 stock in the next year or two. So this is a place to hide some money and keep collecting your dividends whilst the stock gradually grows. The market cap for this stock is $2.2 billion. That's a lot. The dividend yield say 10.73. I don't believe it. I'll take you to Nasdaq. They have more, updated dividend yields than Robinhood. The buy rating for this is 25% buy and 75% hold. Where they have no sell from any analyst, and they're just 8 ratings. So you might take this with a pinch of salt. Okay, I don't have any shares in this stock. I have no shares in this stock, so most of these are just for informational purposes and educational purposes alone. If you buy, you're buying it at your own risks. Don't take my word for it. Do your own due diligence and buy it. I'm just bringing you some of the information that I think, and I personally think this is a good stock. If I wasn't in my other stocks that I am in, I would get this stock. So let's go down to some of the information that I got it here. I'll take you right into yahoo.com, and this is Yahoo Finance. So Two Habors Investment Corp announces third quarter 2021 common and preferred stock dividends. We are going to look at just the common shares, the common stock dividend. We are not going to look at the preferred stock dividends because we don't have any. I personally don't own any of those. I don't think you also have that any either. So we are talking about the common shares. So let's go here. I'm going to read just the first paragraph for you guys. Two Habors Investment Real Estate Investment Trust today declared a dividend of 17 cents per share of common stock for the third quarter of 2021. The third quarter dividends is payable on October 29th. So that's this month, 29th, 2021, to common stock holders of record at the close of business on October 1st, 2021. And the close of business, the business has already been closed today. So I'm going to post this video tomorrow. So everybody who was holding stock yesterday and today, I believe you're going to get your dividends pretty soon. And that's 17 cents per share. Makes sense for a $6 stock. It's really significant. Okay, $6 stock, 17 cents per share. Now I'll take you to the dividend history, and I'll do this real quick. Dividend yield 10.24, 10%. 10% dividends, guys. 10%. You're not going to get this anywhere. I keep saying this and this over and over again. REITs are some of the best investments that you can get because they are paying this. Some of these REITs are paying you dividends of 10%. The S&P, the rationale behind it is if you keep $1 million over there, you can draw 4% from your S&P fund, 4% every year, and then you can retire on that. Imagine this is giving you 10%. 10%. Let's not talk about that anymore. So the annual dividend for each per share is 68 cents per share. 68 cents per share. And the dividends per share every quarter is 17 cents per share. Before the pandemic, these guys were paying 40 cents per share. It was 47 for 2 quarters, and then it reduces to 40 cents per share. They have a tendency, if you can see these guys, look, they have a tendency of hitting low dividends and then raising it over the time. If you can see in 2018, they moved from 47 cents per share to 15 cents per share. And then they went to 31 cents per share and then back to 47 cents per share. They have a tendency of doing that. So I believe they are very good fund managers. So I think they can manage this fund very well. So you look at this, right at the pandemic, they reduced from 40 to 5 cents per share, and then they increased it to 14 cents per share for 2 quarters. And for 4 quarters in a row, it's been 17 cents per share. I believe maybe next quarter, which is going to be the end of the year, maybe I personally think they're going to maintain this, and then from 2022 there's going to be a very good increase in this dividends. So these guys are doing really well, and if you don't have any REITs, these guys are also a very good place. It's a good place to put your money in. 10.24 dividend, and at a price of $6.40 or 44 cents, it makes perfect sense. You are not going to run at a loss. You are either going to run more at a profit if you don't sell this stock. Okay, let's go to the institutional holdings, something that we always like to check, and most of the things that we like to look at when it comes to the institutional holding is 50 plus 1. You guys know this already, 50 plus 1. So anything that is 50% and 51% and above, it's a done deal for us. All right, and this one, the institutional holdings ownership is 63.993. Let's say 64%. This guy's 64% institutional ownership. So the institutions believe in this stock. Don't tell me that you are doing more due diligence than BlackRock and Vanguard and Wells Fargo and all these people. You're not doing more due diligence than they are. These guys know the background, the backhand information. These guys have insider information that we don't know, and they are buying the stock in bulk. Look at this. What I want to show you, this is an updated quarter of the second quarter. They are going to publish the third quarter pretty soon, and I'm hoping that I can go through and give you guys all the information about the third quarter. But this is the second quarter that they updated. Okay, in the second quarter, BlackRock alone bought 21 million shares. That is a change of 75%. They almost doubled. Doubled their holding in this share. Vanguard also increased by 14%. Wells Fargo increased by 2%. A lot of people, look at these guys. State Street Corp increased by 60%. That's 3.4 million. Goldman Sachs, they decreased by 1.5 million. You can go through this. If you go through it, you can see a lot of people that are increasing. A few people are selling. That's fine. But if you look at this increase, 21 million shares in one single quarter, it makes it should take something in your head that, hey, what is happening here? If a corporation like BlackRock is buying 21 million shares. What I think they are doing is averaging down the previous shares that they have and also collecting dividends on what they already have. So it makes perfect sense for what they are doing. So if you don't have any REITs, this is a great REIT that you want to get into. Okay, there's something I want you guys to see real quick. That is the insider activity. I'm seeing a few selling in the insider activity. I'm like I'm not too comfortable with it. But I still think it's a great stock if you can forgo the insider activity that is going on here, because there's been an insider who has sold a lot of shares in the past, I think in the past quarter. Okay, so I really don't. This Matthew Copen guy sold 100,000 and 110,000 and then 84,000. Let's say 85,000. I think he's getting out of his position. because these are direct sales. He's getting out of his position. So this guy gives me a little bit of a concern because this is a current sale right in August. Okay, right in August 10 to 12, he sold about 300,000 shares already. But if you can forgo this, then I think it's still a great stock to get into. I give you the positive and the negative. So this you can overlook. If it was me, I think I would overlook this because the dividends are really good, and I think this stock is going to climb higher and higher. And even if it goes down, the dividends will make up for it. So I don't really mind. So two Habors investment, ticker symbol TWO. Check it out, do your due diligence, and get into it if you want. Dividends are good. The growth perspective is also really good. So find a way, and there are other ones that I've talked about. If you don't like this one, there are other ones that I've talked about. Find a way and get into it if you don't have any REIT in your portfolio. Anyways, just to get out of your hair, like I always say, scared money don't make no money, and you always got to risk it to get the biscuit. Stay blessed. I'm out of your hair, and peace.